Good afternoon and welcome to GrainTV. It's September 9th, 2013. To my left is Logan Burgess and I'm Brock Schimino. We had a negative day coming out of the weekend. Let's start with a fire tip to see how we ended. Corn for December contract was down 4 3/4 cents. Soybeans down 11 1/4 cents. Wheat in Chicago off 5 1/2, and Kansas City was down 7 cents as well. You know, Logan, we didn't have a lot of fundamental news throughout the trade session here today. We did get the export inspections report. Not a whole lot of new information there.
Right.
But I think what really the trade was looking for was this afternoon's crop progress report.
Yeah, you know, we did just get that report in hand. Let's take a look here and see what the USDA changed here week over week in terms of how this crop's looking. As you can see, the top two lines here for corn and soybeans detail that good to excellent rating that people are really focused on right now. And you can see that for both crops here, the USDA downgraded that good to excellent rating 2%. For corn, that's generally in line with trade expectations, but for soybeans, that is a little bit of a story. Trade expectations were for between 4 and 5% good to excellent to be reduced here in today's report. So that's a little bit better than what people were looking at. Wouldn't be surprised if that weighed on things here coming into the overnight session. But you know, based on where the price action is right now, and with how much emphasis is put on Thursday's report, I wouldn't expect serious selling. Certainly, people are still waiting for what the USDA is going to peg down that yield number in particular there on Thursday.
You know, I think heading in the overnight session, the soybean good to excellent rating could be a minor factor. Could continue the selling just a little bit as we start the overnight session. I don't think it's going to weigh on prices a whole lot, but we could see a little bit more selling. Like you said, people are going to be expecting or are going to be anticipating what the U.S. is going to come out with on Thursday, and we did get some analyst estimates for the production totals. If we take a look at this table here, the first column is the average of the analyst guess for what they think the USDA is going to show on Thursday. The very far right column is where we were in August, according to the USDA. So if you take a look at yield for corn, it looks like we're going to have about a 0.7 of a bushel per acre reduction there. Overall production going to be down by about 123 million bushels there as well. For soybeans, I think that's where most of the potential lies to have a little bit of a surprise. You know, soybean yield looks like it's going to be reduced by about 1.5 bushels per acre, and overall production is going to be cut by about 115 million bushels there. So pretty substantial cut to the soybean acreage is anticipated by the average of the analysts.
Yeah, you know, soybeans has really been in the spotlight here since the August WASDE report. It seems like that crop in particular has suffered the most under the hotter than ideal conditions here, drier than ideal conditions. I guess, Brock, put yourself in the place of a soybean producer right now. Would you be aggressively pricing new crop soybeans coming into this report, or do you think just based on where price action is right now, is there some more upside after that USDA report?
You know, I think the potential is going to be to the upside after this USDA report. If we come in somewhere around where the average of the analysts guess, you know, I think we're going to have to rally just a little bit. It's going to leave us with very tight ending stocks once again this year. Not a whole lot's going to change there. So I do think we do have to rally just a little bit. And if you take a look at where we were last year, about the same time as when we hit the high for soybean market in the right after the September report. So you know, that was a little bit different last year. We had a little bit earlier crop. We had you know, that heat and drought, you know, pretty much factored in throughout much of the summer. And I think this heat and drought that we got this year is a little bit later in the summer, so I think we're going to see a rally just a little bit later if we are going to see one here coming after the report.
Okay, if you want strategies to help deal with that price risk here coming into Thursday's report, feel free to give us a call here at the office. Our number is 877-472-4607. In general, that's kind of what people are looking at in terms of production. I know, Brock, you referenced ending stocks there a little bit. That certainly is going to be a huge component of this report as well, as we factor in more of the demand side changes here, and we're going to help break that down tomorrow and then on Wednesday as well here on GrainTV, so stay posted for that. In general, though, that's kind of what we saw here on a Monday that we saw a little bit of weakness in the grain market. We'll have to see if more weakness is added on just based on those soybean good to excellent ratings here in the overnight session. Thanks a lot for tuning in. We'll see you tomorrow.